Good morning. This is Ron Brown. It's October 5th, 2023. Today I'm going to continue with my series of my daily analysis process, and today I'm going to talk about intraday prospecting with some of the major stocks and ETFs in HCS Investor and in the market. Once again, here's my standard risk disclaimer. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now today I'm recording this with the new version of Snagit. It has some video features that I want to try out, some drawing tools primarily. So if I make a few mistakes here, it's because I am using a new program. Okay, now what I want to talk about today is intraday market momentum. At the end of the day, end of the trading day, you can look and find a bunch of candidates for a watch list, but I'm more interested today I want to show you some, or I should say one of my prospecting techniques, which falls under my Ron Brown folders. If you install the latest add-on, you're going to have these additional groups. Now, I did a video about this before, but I've added a few things. I went down through the sectors last time, and the intraday market momentum sectors up and down, but I've added some more scans to this, and I'll go over that. First of all, I'm going to go into my designer, and I want to make sure my industries are up to date. I'll just go under Tools, Rebuild Indexes in Group. Just takes a few seconds to do this. And the reason I do this is because the sort on these momentum scans are based upon the combo is based upon the industry percentage price change for the day. Now I'm calling these the intraday market momentum, and these are the scans I had in here. I call them sectors up and down, even though I'm sorting on industry percentage price change up and down. The reason for that is I don't have a field for sectors up and down, so I just use the industry percentage price change. But it does a good job, or a good enough job. Because when I sort by the industries, if you look over here to the right in these columns, it'll show you the sectors they're in. Now, I call this sectors because of the filter, and this is from the other video. But what I did a while back is I went in to the spider sectors and located all of the stocks that belong to those sectors and put them in individual groups in my user groups. And I, rather than just looking at the ETFs, I can actually go down into these sectors and find the stocks that make up the sectors. Now, this field right here, the intraday one-day change, it's up, greater than 0 or less than 0, depending on the scan that I'm using. So we'll just cancel out here. You can see this is sectors up because these stocks are up for the day. Now, there are going to be stocks that are in multiple sectors, but what we're looking for is the weight of evidence. So I'm going to click on this, and then I'm going to bring up this pie chart, and it contains the sector field, as you can see. And it tells me that healthcare is a dominant sector to the upside, financials is second, technology is third. Now if I drop down here one level to down, you can see that on the downside, technology, I believe it had 16 on the upside, but 59 on the downside. So the weight of evidence is technology is weak today. Now the market's down today after we had a big day up yesterday. It's down today. It's starting to bounce right now. But you can see on the downside, technology's weak, consumer discretionary is weak, industrials are weak, and so on. This right here is an ETF, but I'm not going to talk about that right now. Let's go back to the sectors up. And once again, healthcare is a dominant sector, followed by financials. Technology has 14, not 16. So you can get a feel for the market flow based upon sectors using this pie chart. Now if I go down here, get rid of this, and make sure I'm sorted on raw combo, you can see that the sort is the industry groups. Now what I decided to do is, in addition to these two, same filter, but I've added what I call my Wyckoff demand combo. Now when I click on this one, Lamb Weston comes to the top, but when I click on number 9, you can see Market Taxes Holdings comes to the top of the list because it is showing more demand based upon this Wyckoff combo. And I'll open up the combo so you can see it. It's based upon intraday volume compared to the 20-day moving average volume, the range, the high minus the previous low. These are all intraday, and intraday one-day change. And this gives me this list based upon demand. So if I click on this chart and I'm bringing up both the weekly chart and the daily chart, you can see there's strong demand. Looking at this, now I'm going to bring up the drawing tools. This represents the group, and the green is the strength versus the group. So it's going up slightly, so it's outperforming its industry group, and this industry is information services. It's also outperforming the S&P slightly today because that turned up. Now notice everything just recalculated because I'm letting this update. I'm going to go over here and point out that last week there was stopping volume on this stock. This week, the projected volume for the week is above the 90-day moving average, and you can see that there is a strong candle on this. Now this stock has fallen off dramatically. Let's go over here and take a look. I'm going to use a different tool here. I think I'll switch to red. Now this right here, number 1, is strength coming in. This is a confirmation of that strength, and then a slight pullback. Notice the volume was light. Oh, I can't move that, I guess. Anyway, the volume was light, and then we had an effort to rise yesterday. There was a slight gap down today, and then volume started coming in, and it's projected above average. Now, I'm going to turn off the drawing to get rid of those. And then I'm going to scroll down to the bottom here. Now I'm using a little different screen resolution for this because I want to show everything. So if I go down here, Lowe's is still up, but see it's only up 2 cents. So the demand is not there like on the prior stock. It was moving up, but now it's pulled back. Now let's go back up to the top and let's take a look at this. This is yesterday's information. It was high for the volume, spread was above average, and the close was very high. What is it today? I have to bring it up. Today, the volume is low so far, but the projected volume is high. The spread's above average, and the close is very high, which represents this bar right here. Now it says volume is low because the magenta line represents what this volume should look like at the end of the day, but the green represents where the volume is right now. Now when I'm using this view, I like to look, I didn't mean to do that, I'm going to go back to raw combo and go to the top of the list. I like to look over here and see what the VPA signals were yesterday and the prior day. So the prior day on this one, effort to fall, and then strength strainer turning yesterday. So it was a shakeout, possibly a shakeout. Volume was very high. The spread was below average, which means that there wasn't a big candle, and the close was very high yesterday. Also, it's been down 12 days, the 3 below the 6, and the VPOC was positive and then it went negative 2 days ago. Okay, let's bring this chart up. Wow. Something is happening on this today, and it has to be a news item now. Do you think maybe that somebody knew what was coming? Strength coming in and stopping volume yesterday based upon this bar, and then the news comes out today. I have no idea what the news is, but some traders were buying into this yesterday. How do I know? I look at the volume and the VPA flags, and then a big move up here today. Okay, I'll turn this off. Now let's look at another stock. NVIDIA has been moving up over the past several days. Today it's up. If we go across here, you can see it's up 86 cents, trading at 83.26% of its daily range. Volume's a little bit light, but the 50-day moving average volume is 50 million shares. Very liquid stock. You can see that 5 days ago, the 3 crossed the 6. 6 days ago, the VPOC crossed over. And I'm going to bring this up. And let's take a look at this. I'll use the arrows here. Outperforming the S&P, outperforming its group. The group's kind of flat. This is a semi-group, not doing much. But this stock is outperforming. You can see how valuable this information is. Now here's the intraday information here. What do we have today? This is 10.5. Volume is relatively low. The spread's very narrow, as you can see. But the close, or the current high, is current close, if we were to close it today, would be very high. So this is good. Now let's go in here and let's make use of these here. Here's strength coming in. Here is a low volume test and confirmation of that strength. Here is confirmation of the strength. Or here's another strength coming in, and here is confirmation of that strength. And then it gapped up and there was a no demand. It moved up the next day anyway, and then there was an effort to fall, but that was a one-day shakeout. You can see that the volume didn't get above the 90-day moving average volume. The last day, it closed near its high. It didn't generate a low volume test. Closed near its high though, and you can see there's volume coming in to it today. Okay, now I'm going to bring this quick pick back up and show you that I'm going to the supply side, and I'm sorted on raw combo. Here's a stock whose volume was high yesterday. Spread was above average, and it closed in the middle, but it's been going down for 24 days based upon the 3 and the 6, and it's been going down 13 days based upon the VPOC. Now these are not in the chart, but I'll quickly go to that chart, and you can see that it's been going down for quite some time now. And he's extremely weak again today. I'm going to go back up to 1C. Now, using the drawing tools, it's underperforming the S&P. The group was going down here. It looks like it's flattened out, but it's underperforming the group. This is an extremely weak stock. What's it doing today? Volume is relatively low. Well, here it is. The volume's clear down here, but this is projected volume. Spreads above average and the close is down. Now look at this thing. It has just been in a free fall. Take the drawings off. Integrated utilities. Maybe they missed a dividend payment or something, but it's really been in a bad way. Now looking over here, said stopping volume yesterday, but it didn't stop, did it? The past 2 days have been stopping volume. There's no confirmation on that stopping volume. When you get these big volume bars and stopping volume, it has to be confirmed. You don't just step in front of these. So this is the downside. Now I'm going to move down to a couple of new ones I put in today. Now this is the same list of stocks, but I also included something else because I wanted a little wider view of the market. So I'm including the ETFs that are very liquid and easy to trade. Now to do this, I'm going to show you the filter. And I have all these groups in here just like before, but now I have a group member of the options, the best securities to trade. This is in my non-index files. These are very liquid options. I got this information, I think, from Tasty Trade a while back. So what this does, in addition to individual stocks, if I'm looking for some liquid ETFs to trade, if I just go down this industry group column, you can see the Ultra VIX short term is up 5.79% today. If I bring it up, there is a low volume test. There's an effort to rise, and then there was a pseudo upthrust here, but then a low volume test today, and you can see volume is coming into this. Let's look for another one here. It's another VIX. Here's the ultra short S&P 500 2X, which on the weekly chart has actually looked pretty good here. Here's a higher low, and it's been moving up. It's moving up again today after yesterday's pullback. Now, if you want to see what's in here, you just sort on the sectors, industry or sectors. If these are blank, it's going to be an ETF. There is one stock in here I have yet to assign to an industry group, but everything else is an ETF. So if you sort on this, and I'm just going to sort on industry. Then I want to see which of these ETFs are the most in demand. What I'll do is I'll bring up a resort and just type in raw combo rank, and then what it's doing is it's applying the demand combo, the Wyckoff demand combo, to the ETFs. I'm sorted, my primary sorts industry. I'm just looking at the ETFs here, and I want to see which is most in demand, and you can see right here that these are lining up according to the demand of the ETF based upon the Wyckoff combo. A little bit confusing, but if you play with this for a while, it'll open up a different world for you, because you're not only looking at very liquid stocks, you're looking at the most actively traded ETFs. Now I looked at my other computer and the market's starting as well off its lows now. It's at around 40% of its daily range. But the Ultra VIX is still the most in demand. Now look where this crossed over. 11 days ago on these and 14 days ago on the ultra short S&P 500. So I'm going to bring this up, or it's up already. Let's drop back down. We're going to look at 2C. You can see where it crossed over. Had a one-day pullback there. But as this market has gone down, this ETF has gone up. So it's just giving us the option of not only looking for liquid stocks and having demand or supply, but also ETFs. Now, SDS, let's just go in here and okay, I've moved over to Thinkorswim SDS. Now you can see as the market, this is a 16 minute chart, as the market has started to rally, SDS has been falling off recently. But let's say that I'm interested in a spread either long or short. I'm just going to go into add simulated trades. Let's see, I'm out 36 days here, and I can see what the spreads are, what the liquidity is, the probability of in the money or probability of touching. I'm just going to go to a different view here, volume open interest. And this one's not as liquid as I would think. You can see the calls. There just aren't many, and the reason for that is, I'm sorry, I'm at 36 days out. This is a short-term trade, more than likely. So let's look at 8 days, and you can see there's a lot more open interest here. There really isn't much volume. Let's go to the shortest. You can see a lot of a fair amount of open interest and a lot more activity here. So these options are traded on a short-term basis, more than likely. There's just no liquidity in the longer term ones, it doesn't look like. Let's go out 43 days. You can see there's some open interest, but no liquidity today. There's just no activity on the buys and sells. Anyway, I was going to point out that you can trade these. If you don't want to buy the ETFs, you can trade the options. But the ETF, I mean, this is a pretty inexpensive ETF trading for, well, let's go back to the daily and I'll tell you exactly what it's trading for. $37.98. If you think the market's going to go back down, you want to get on this, but it's a little bit late getting on. Using my over indicators, this is what we're looking for. Look at that beautiful call right there. High volume up bar closing on the high indicates strength as it crossed over. And what was that day right there? 9:15. So it was in this week right here. You can see a series of higher highs and higher lows on the weekly. Okay, before I wrap this up, I'm going to go back in. I'm just going to go to the Wyckoff demand long side, make sure I'm sorted on raw combo. And you can see this stock is still most in demand, followed by NVIDIA and then Lilly. Let's look at one more, TDG. Yesterday, volume was less than average. The spread was above average and it closed high, but it has not, the 3 has not crossed the 6 as of yesterday. It was down for 21 days and the VPOC was also negative, but we're getting some buying today, aircraft and parts. Let's just take a look at it. See us. First of all, I look over here at the weekly. I can see it's been going down for several weeks in a row, which is not good, but we're starting to see some buying interest. I'll bring this up. This is the 200-day moving average right here. We're starting to see a little bit of buying interest on these two candles, but the trend remains down, and the 3 remains below the 6. It's a very expensive stock, and I assume the options are not very liquid on this either. TDG, I'll take a look here, and then we'll okay, let's go out. Well, we'll look 15 days out. You can see there's just not much liquidity here, and the spread's too wide. Now, the reason this is coming up is it's in one of these sectors now, too. If you just want to look, use this and look, I'm in all securities. If you just want to look at the liquid options, all you have to do is, it's going to update right here. Update. If you want to stick to liquid options, click on Choose Group, and then go into My User Groups to the non-index files and select this folder, Options Best Securities to Trade. Now what's going to happen is that filter is attached to this view, but rather than looking at all the stocks in the spider sectors, it's only going to look at stocks that are liquid stocks. So we know NVIDIA is liquid, Starbucks, Chevron. These are stocks in this folder which are liquid. So this is on the upside and this is on the downside. All these are familiar names. So let's go back to the upside. Let's just take a look at, I haven't looked at it yet. Now, what's the trend? Trend is down, but we're getting a low volume test here. Effort to fall. This was a scary moment for those who are long, trying to bottom fish. And what do we have here? We have 2 candles. Volume's not all that great though. You can see spreads narrow and the volume's low, and the fan is down. I mean, this would be clearly a bottom fish. But let's just take a look at the options and see if they're liquid. SBUX. Okay, let's go out 29 days. And you can see that there is decent open interest on these. Trades are very light today. If I go out 2 weeks, or 8 days, I'm sorry, till expiration, you can see the volume is here. This is where the liquidity is. Here's the open interest. I like to, if I'm putting spreads on, I like to have at least 9 or 10 days rather than 8 days, just for the spread to have time to work. This is out 15 days. You can see there's some weekly. What's important is the bid-ask spread, and you can see how tight the bid-ask spread is on these options. So it's easier, if there's liquidity, it's easy to get filled. If there's a tight bid-ask, your risk-reward is much better. I'll just do this very quickly. Okay, this is 29 days out. There's a 10-cent spread between bid and ask. If I hold down the shift key for the 92s and then buy the 92s and sell the 93s, what's our spread here? I have to do that again. I held the shift key rather than the control key. What I want is I want an in-the-money call to buy, and I want to sell an out-of-the-money and there's only a $1 debit on this. Let's say I want to risk a couple hundred. Now there's a $4, $3 debit. If I look at the risk profile, I can see that by doing the spread with 3 long, 3 short, I'd be risking $300 max. I am right here at 92.30. To break even, I'd have to be at 93.04. But, you know, I've got almost a month to be there. So 312 now would be the risk. 291 would be the amount that I could gain if I held it till expiration, which I never would. I would just hold it to try to get 50% profit out of it. And my debit is $1.05, which would be the maximum I'm willing to do on a $2 spread. Anyway, the liquidity is what you want to look for when you're trading these spreads. I'm going to end this video now. Thanks for listening, and